Yeah, so I'm just going to go over a position I took on $CAD on Monday. Closed it down today for 2.26%. It was a very nice trade, and I'm just going to go over it now. So starting off with a higher time frame, we can see that on the high time frame we have this sort of corrective structural move to the downside. If we just look at $CAD's price nature in general, sometimes we do start off these very impulsive, aggressive runs to the downside with these sort of corrective starts. So I wasn't too this wasn't too much of a negative. If we just see here, we see that we tapped into this hook point, we expanded into it, we pushed to the downside, and we got this larger structure here. What happened is we got this aggressive sell-off, and we left this little footprint in the market here. We gravitated back towards that, and we had this strong daily retrace, which gave us the idea that we potentially could be playing this A to B range right here. Alright, A to B range. This daily retrace, strong retrace, gives us the idea that we could potentially just be following through down to this low, even if it is just for the shorter term. Now going down to the 4 hour, we get a bit more clues, right? So right before this breakout, we form this sort of running channel style, right? This is our liquidity point, this sort of hook point that we're looking at. And then what do? We structurally approach it with a sort of 1, 2, 3 ending. So that is very nice from that standpoint. What we do then get is this very strong reaction on the 4 hour, right? So having this very strong reaction gives us the idea that all we need to do is wait for continuation in this area. So that's what we did, dropping down to the 1 hour, looking for a 1 hour continuation here. As you can see here on the 1 hour, we were stalling. And the thing about this structure is it was very likely of coming, just due to the fact that the DXY was actually forming a very similar structure. If we drop down to the lower time frame, just due to this lack of depth on this structure, it was more clear on why we took it on the lower time frames. So as you can see here, push down, continuation, is very likely to commit. Very direct price action on the 1 hour as well, so that was nice from that standpoint. As you can see here, we've got this sort of left head, right shoulder going on. So that's it's not really used for our confluence. It's just used as an idea for our stop protection. Dropping down to the 15 minute, you can see the structure is much more clear from here. We have this sort of 1, 2, 3 going on. Granted, the first touch is very very weak, but the risk mitigation was used to reduce some of that risk right there. So as you can see, we have our base. What sold it to me here was the structural approach on the last leg. Yes, we do have like this smaller section on the third touch. However, this mini scoop up just gives us the idea that we're actually sweeping more orders before we do get that strong sell off to the downside, which was very nice from that standpoint. So dropping down to the 5 minute, just so we can see the structure a bit more clearly. You can see here, very clear 3-touch structure into that scoop. So all we were waiting for now is a 15-minute retrace, and the reason I didn't drop down to the 5 minute for the risk entry was just due to that weaker first touch. I was mitigating some of that risk from that weaker first touch using the 15 minute. So we got that retrace on the 15 minute, which I was happy entering on. As you can see here, this is our area that we need to protect against, just due to this being potentially the left shoulder, and price could potentially just supersede or wick into that area. So I want to protect that with my stop loss. I did get in with a 14 pip stop. Granted, I could have gone a bit tighter with this stop loss, but it did pose a reason for it to be that large. Let's go on to the management now. So as soon as we entered, we just got into a bit of drawdown, which was normal. I understood why. We had this scoop up here, and on the 5 minute it's a bit more obvious, but we had this little scoop up for a mini double top, which does happen on sometimes with these sort of structures. It just means that we're tagging a bit more orders before we drop to the downside. And then you have the second entry that you could have entertained for anyone that was looking at this, could he be able to entertain another 14 pip stop just by protecting above this area? You would have had just this mini scoop double top, which would have been a nice entry as well. But as you can see on the 15-minute, we started to commit. On the 1 hour, we got that very strong 1 hour close, right? We tapped instantly the base of the structure, so I was happy moving to break even at that point. We then continued to sell off. We started moving a bit correctively. And then overnight, we actually broke this low. So I saw it when it was around about here, and that was like 3 a.m. Temporarily woke up. But yeah, after seeing that, I was happy moving to a bit of profit just on the breakout of the structure right here. So not too aggressive, but not too lenient, right? I want to still lock in a bit of profit in this run, because at that point we were running about 3%. So 1.2% there, locked in. And I was being a bit lenient because, as you know, look at this price action going on here. It is a bit corrective, so we are susceptible to a bit of a pullback before we do drop to the downside. As you can see there, we did pull back a bit, and then boom, we dropped to the downside there. So I was happy going a bit more aggressive after that candle, because essentially if we do not commit from this candle here and we start moving back up to the upside, I don't want to risk price just coming all the way back up to here before dropping. I'm not a gambler, right? I'm going to lock in the profit that I have. I moved my stop loss to around about 2.9, 2.26, around about here, just below the ray line, because essentially if we do pull back into this area, we aren't going to form into something larger. So I gave it a bit more space. It did essentially just retrace on the 1 hour there. So yeah, overall, I wouldn't really change any of the execution. I was happy with the process going into it. Very nice forecasting, forecasted this position exactly. And yeah, just using discretion in the sense of sometimes you don't always get those perfect structures with the largest depth, right? When you have a 3-touch structure going into this area, I mean, looking at it from a confluence point of view, I mean, it had everything it needed to go, right? You wouldn't really get this evolving into anything much, right? The only way it would evolve, it would drop to the downside, come back up for maybe more depth, but we were able to manage that and get that to break even anyway. So yeah, that was a very nice position. I'm happy with that. Wouldn't change anything with the management either. And yeah, that was $CAD. Catch you guys in the next one.